There's not a day goes by I don't feel happy to get up and go to work in the morning. It's an amazing job.
Thoughtful, current, and friendly.
Friendship.
The foundation has been really impactful.
Impact, integrity, and inclusiveness.
I would say collaborative.
There's not a thing that we can do without working with others.
Collaborative, innovative, and intellectual.
Collaboration, partners.
Partnership, because it does really feel like we've been able to work with the Max Bell Foundation so that we can make a difference.
Fair, transparent, and progressive.
Creativity.
Out of the box.
We can be very creative in how we do these things. We do think outside the box quite a bit.
I feel empowered and valued and supported. But maybe the one that kind of encompasses all of that is that I feel
trusted. And maybe that's just because they have confidence in the decisions that they make.
The Max Bell Foundation's been around for 50 years. This is its 50th anniversary. It has made hundreds of grants to charities all across Canada.
The Max Bell Foundation has been integral to our growth, related to our actions meeting our ambitions.
Their interest in and their willingness to listen and then distill what they hear very carefully puts Max Bell in a league of its own.
Well, at Max Bell, we don't purport to solve all the problems in the world. We have a clear and I think compelling list of priorities. But we also don't operate in a bubble.
One of the advantages, I think, of the Max Bell Foundation is that the founder, Max Bell, provided a tremendous amount of latitude for the organization by simply saying that he wanted to make society a better place.
I believe Max had a vision for what it meant to be an incredible citizen supporting Canadian society.
He wanted an organization that would adapt with the times and that would tackle the problems that wise people thought were the most important at the moment.
I don't know if you know this or not, but Max is my grandfather. I think Max would be a little bit surprised in how successful the foundation has become.
Well, as provost of McGill University, I think it's important for me to continue the long-standing relationship between the university and the Max Bell Foundation that of course goes back to Max Bell's own time as a student at McGill University and the foundation's longtime support for activities of the university, including the Max Bell School of Public Policy.
The Max Bell Foundation in 1997 decided to focus on public policy. And when we decided to do that, we got into the nitty-gritty of the complexities of making, keeping, or changing public policy.
One thing kind of comes to mind, and it's the Public Policy Training Institute. So this is a professional development program that the foundation offers for people who are employed by charities in Canada that want to inform public policy decisions.
You have access to mentors, thought leaders, and former elected officials and former public servants.
They challenged my thinking and my communicating and helped me form an ask to government. And that process really set our organization on a different road forward.
It's made a big difference for how we do our public policy work at Momentum, but also how we work with our partners in the community sector to have a collective effort in influencing public policy.
But it's what the people in that program learn from each other and what they do together after the program. I think that's been really, to me, one of the big marks of success.
The range of people who have benefited from it often surprise me.
Ultimately, the beneficiaries of the Max Bell Foundation's work have not just been the program participants, but all of the people that the program participants have ultimately gone on to advocate for.
Oh, okay, so many people have benefited. Obviously, the grant recipients themselves and all the people they serve. But back to the PPTI, that is an enormous community, and it kind of snowballs into a larger and larger community every year.
Single year. So Max Bell, by being able to build capacity of the community to influence government policy. It helps government, and then ultimately it helps everyone in our province.
In a way, Max Bell has touched on most Canadians because of the services that they end up supporting, or the research that they end up supporting actually ends up getting into policy, legislation, and funding mechanisms, which then better support, at least in my work, in my area, vulnerable populations in Canada.
I mean, in our experience, it's been the audience that we work with, empowering thousands and thousands of classroom teachers, and hundreds of thousands of students.
When you fund mental health programs, when you fund Indigenous education and environment-focused programs, this benefits the public good.
All of our lives intersect with the three areas that they focus on at some point in our lives: education, health and wellness, environment, and good public policy that is informed by people closest to the issues is going to be better public policy and is going to serve all Canadians.
What are we doing today that needs to be changed so that we can have a broader impact, a deeper impact on the systems that we're not happy with?
You should feel free to contact us and tell us what kind of project you're interested in pursuing. And don't be afraid to debate with us the opportunity that you're presenting to us.
That's where the magic happens, working with knowledgeable people who have leadership skills, expertise, and a passion for the topic, and then bringing them together with the funding part, which is the Max Bell Foundation.
Focusing on the people who are involved in the charities, giving them the resources that they need to change the world in which they live in a way that benefits the people they're focusing on.
When foundations can become intimately involved with the work that their grantees are doing, it is empowering.
When you're working with the right people on the right issues, in my view, there's not much better.
The people that you get to meet when you're in this line of work is just incredible. It's hardworking, committed, smart, good people who want to make the world a better place.
Max Bell should do more of the same because it works.
Stay current, stay relevant, and stay friendly.
Continue working with people who are interested in making change and improving our society. Keep up the great work on capacity building and continue to tackle some of the big problems that lie ahead, because there's not that many organizations that can do it as well as the Max Bell Foundation has.
Bonjour tout le monde, good afternoon. I love visiting Montreal. There is a kind of magic about this place, as you all know. And for a very, very long time, this has been a place of meeting and exchange amongst Indigenous people, including the Haudenosaunee and Anishinaabe nations. And the people from those nations continue to live and love and work in this place up to today. I invite you to join me in acknowledging and honoring that. But there's something else. Their legacies today are woven together with the legacies of many other people in this place, whose legacies originate in many corners of the world. And I think it's that weaving that has something to do with the magic of Montreal. Welcome. Welcome to you all. My name is Alan Northcott. I think, as you've seen from the video, I'm the CEO of Max Bell Foundation. This is our 50th anniversary. And one of the ways we're marking the occasion is by hosting a series of conversations across the country. Why? Well, we believe that one of the concrete ways to make the world better is to make better public policy. And we think one of the ways to make better public policy is to bring together different perspectives on some of the toughest issues that we're facing today. And we think a way to do that is to have something that we think Canada needs more of in 2022, and that's informed, respectful, engaged conversation. The issue before us this afternoon is a particularly challenging one. The need to get to net zero is pressing. The complexity of reaching the target is daunting. And among the many things it's going to take to get there, and not to put too fine a point on this, is money, and a lot of it. So how do we finance this transition? Well, it's my pleasure to introduce to you Chris Reagan, Director of the Max Bell School of Public Policy here at McGill. Chris will in turn introduce you to the panelists for this afternoon, and together they're going to tackle that question. So just before I turn it over to Chris, I want to let you all know in the room you will have an opportunity to ask questions to the panelists, and those of you online, you've been given a Slido link. If you enter your questions there, we'll be sure they get to the panel. Thank you.
Thank you, Alan. Thank you, Alan. Okay, I wish I could claim credit for the first half of the title of this event, Money for Nothing, because I think it's a great first half of the title, but it wasn't my idea. So I think that's the smart and creative people at the Max Bell Foundation who came up with that. I came up with the boring part after the colon, which is investment in financial policies to get to net zero. So the focus is how are we going to mobilize investment, private, public, maybe a bit of both or a lot of both, and how are we going to think about financial markets in terms of policies for all of this for getting to net zero. And I've got three great people here that have different perspectives on this issue, and they come from different parts of the world. So let me start with Rachel Sampson, two to my right. Rachel is the latest addition to the IRPP executive team. She is the Vice President of Research. Before that, she was the research director for clean growth at what used to be called the Canadian Institute for Climate Choices, and now it's just the Canadian Climate Institute. And she was there for a couple of years, maybe 3. Before that, she was a private consultant in the environmental policy space, doing work for OECD kinds of organizations, other groups. And before that, she was an economist with the federal government in environment, at finance, and elsewhere. So she knows a lot about environmental policies and the kinds of policies that we will need to get to net zero by 2050, which is, even though that's only 30 years away, 28 years away, that is an ambitious goal. On my far right is Paul Rochon. From 2014 to 2020, he was the Deputy Minister of Finance at the Department of Finance in Ottawa, federally. And he worked his way up to that position, so he did a whole bunch of things, much of which was at finance, but in other places as well. So he knows a lot about how the policy sausage is made, and he might tell us some of those secrets. Some of them you don't want to know. Currently, he's an executive advisor at Deloitte Canada. So he is now thinking from the private sector side about, and he's putting a lot of thought into exactly this issue about investment and how we're going to achieve the investment that we need to get to net zero. Finally, on my immediate right is Martha Hall-Findlay, who is the Chief Climate Officer at Suncor. So Suncor, as you know, is one of the country's largest, if not the country's largest, producer of oil. And so it's got skin in the game, shall we say. Prior to joining Suncor, Martha was the president and CEO of the Canada West Foundation. Before that, she had been a corporate lawyer, an international trade expert, and lots of other things. And she was an elected MP for 2 terms in Ottawa. So she has spanned the space also between policy in different ways, policy and the private sector. So 3 excellent people with different perspectives. And this is what we're going to do. We've divided the discussion for the next 45, 50 minutes into 4 sections. One section is going to be what is the central challenge before us. The second section is the investment imperative. What is it? What's it all about? The third section is the role to be played by what is called sustainable finance, quote unquote. What does that mean and what's that all about? And what are the unstated, maybe the hidden, the underemphasized challenges for policymakers. That's where we're going. And in each of these sections, I'm going to pose 2 questions to 2 of these individuals, and the third one is then going to comment on everything they've heard. Alan said he wants some disrespectful agreement, but I think he's looking for the other thing. I think he's looking for some respectful disagreement. I'm hoping that there will be a little bit of disagreement here and there, which is what you often get from competing perspectives. So that's where we're going. Roughly 50 minutes, give or take. Then we will open it up to questions from the audience. So, in the first section on identifying the central challenge, you might think that this is a low-hanging fruit question. You might think this is a slam dunk. It's clearly the objective is simply to reduce greenhouse gas emissions. But my question is it that simple? Are we really here to think about for the next 28 years and beyond reducing greenhouse gas emissions, or is there some other objective in addition to that we should be thinking about? And I'm going to start with Rachel Sampson.
Thanks, Chris. So when we're talking about net zero, there are 2 key things we need to recognize. The first is the scale of the economic transformation that is going to be required to hit net zero. This isn't environmental policy like we did before, where we're talking about scrubbers on smokestacks or incremental changes in energy efficiency. This is a transformation of the economy, and we need to change how we produce energy, how we consume energy, our transportation systems, and inputs to production. They're massive changes that we need to do. And that doesn't mean that it's not worthwhile. We know that the costs of unmitigated climate change will be far greater than anything that we're contemplating in terms of the costs of transition. But the second thing we need to recognize when we're thinking about objectives is that the world is transforming around us as well. So the global economy is transforming, and Canada's within that. And we're going to see changes in trade patterns, changes in markets, and those have implications for Canada. So when we think about those 2 things, the scale of the domestic challenge and the global transformation, we can think about Canada's objectives within that context. So yes, we want to reduce our emissions to hit net zero, but we want to also succeed through this domestic and global transformation, economically, socially. So how do we do that? And that's part of thinking about the financing challenge with those other objectives in mind. It's not just a technological challenge of implementing this technology in this area. It's how do we transform the economy, and that's focusing on decarbonizing the economy of today, but also on building the economy of the future that's going to be successful through that global transformation. So we're thinking about financing. Of course, we want to do it all, but governments are going to have to make tough choices about where they place their emphasis. And we need to ensure that enough emphasis is placed on that building the economy of the future component in order to be successful.
So let me just ask a quick follow-up, because I was going to ask whether those 2 things are consistent with one another or whether they are inconsistent. You just hinted at the idea that government's got to set priorities. So if it does more of one, it might have to do less of another simply because it's got less attention to focus on both things. But is that the only sense in which they're in competition, or is reducing emissions somehow at odds with the other objective of building that greener economy, or do they go together?
Well, it's possible to divide the transition into 3 ways. So there is a component that we need to decarbonize that aligns with that successful economic transition. That's things like steel production. We need to reduce the emissions intensity of steel production, but we're still going to need steel in a net zero economy. But then there's a category of things we need more of. So things we might not have today that we need more of. So renewable energy, clean technologies, electric vehicles. And then there's a third category of things that we need less of in order to achieve global climate goals. And that is going to include fossil fuels. There is no global scenario that gets to our climate goals that doesn't include a dramatic reduction in the consumption of fossil fuels. So when we're thinking about that third category and we're talking about economic transformation, we need to think about what we're transforming to.
So I just want to underline the point that Rachel talked about reductions in the consumption of fossil fuels. She did not talk about reduction in the production of fossil fuels. I have a feeling that we're going to come back to that point because that might just be an important point. I'm going to go to Martha. Question 2, which is this, what you just heard from Rachel, is this mostly an issue for the private sector, or do we need to rely first and foremost on policy action from governments, federal, pick your government, or is it, both in equal measure? How do we think about that?
So first off, thanks for the invitation. This is great, and thank you all for being here.
Lovely to see you after 2.5 years.
It's like people. And I want to just start off by saying I agree. We will need less consumption of fossil fuels, less combustion of fossil fuels in order for the world to get to net zero. So just want to make that very, very clear. Yes, I work for an oil company, but this is an example of, we actually agree on where we need to go. Then we can talk in some details about how we get there. But the answer to the question, Chris, is no. It is not just for the private sector, and no, it's not actually just for government. It has to be in all of the above. I've often, in the last couple of years in particular during COVID, have really looked at some of the examples of collaboration, and frankly, some examples of not such great collaboration. Fighting here in Canada, long history of engagement, World War I, World War II. I know my own family very much involved. You don't fight a world war and you don't fight a world pandemic by saying, hey, you private sector, you look after it. And you don't do those things by having the government say, hey, we can do this on our own, because governments don't do those things on their own, right? It has to be an all of the above. Ukraine is not fighting right now government only. But man, if they did not have the government that they have, it would be a lot harder for the individuals who are resisting and for the companies around the world who have said we're pulling out or we're putting in sanctions, or other governments putting in sanctions. This is an all of the above challenge. Climate change is like those other things. This is not business as usual. It is an all of the above. I have to pay my attention to my notes because Chris is a huge taskmaster, and he knows if I don't really stick to it, I'll talk too long. But this is why we so desperately need collaboration. I keep hearing this, we need so-and-so to pay for this. We need so-and-so to do this. We can't. It's way too big of a problem. It's way too big of a global problem for any country to try and do this on our own, any company to do it, any sector, any government, and certainly individuals. We can't do this on our own. I want to give one example of a collaboration that we saw during COVID that we have learned from, frankly, in our sector. So this was really headed by the Creative Destruction Lab out of U of T. This was the Rapid Test Consortium. And this was a whole lot of different companies, including folks in academia and some government engagement, that said, look, if we all just kind of do this on our own and don't collaborate, we're not going to find some answers, and we need answers really fast. So this consortium, and it had Air Canada, it had Suncor, it had a number of other companies, at least a dozen, different sectors, basically saying, you test this one, you test this one, you test this one, and let's actually compare notes to see what works. That doesn't happen very often, and it was an extraordinary example of how collaboration can achieve really important results, because all of these industries needed to figure out how to use rapid tests, what rapid tests work, so that they could actually encourage and allow people to be able to work and get things done, which was obviously important from a societal and economic, but also societal perspective. So I would just say, no, it's like fighting a war. It's like fighting a global pandemic. This is an all of the above, really unusual, but hugely important opportunity for that kind of collaboration to succeed.
So a quick follow-up on this. I want to ask about incentives, because it's not in your, it's not something we agreed to talk about. So
surprise, surprise.
But policy can create and alter incentives for the private sector and lead to changes in behavior. But are there other incentives that don't come from policy that will drive the private sector behavior? I guess what I'm really asking is, to what extent will the private sector be pushed in this direction quite apart from policy, but because they're responding to the demands of their shareholders, the demands of their workers, their demands of their customers.
Can I add one other thing?
Sure.
That there are actually people in the private sector who care.
Good.
Go figure. But one of the reasons I joined the company I joined was Suncor has been engaged in things like economic reconciliation, if you will, with Indigenous communities in the areas in which the company works for decades. And it has had real challenges. But by being at this for this long, the learnings, the successes, the trials, the tribulations, but let me stress again, the successes that we're now seeing from employment to procurement to business success to now, we just signed our second full equity partnership with Indigenous communities. That didn't come, believe me, that didn't come because some government said it needed to happen. That came because there were people who saw that this was a critical part of engaging in the communities and with the communities in which they work. There are an awful lot of people, even in my industry, believe it or not, who actually recognize that climate change is critical, as I tried to say when I said I actually fully agree with Rachel.
Your former CEO, Steve Williams, who was an advisor to the Eco-Fiscal Commission, was a passionate advocate of carbon taxing, and as an advisor to Eco-Fiscal, we got him, to stand up in an event in Calgary in the spring of 2015 and talk, out loud about how the world needed a carbon price. That was a character-building moment for him. I'm sure he had many, but when you say those things out loud in Calgary back in 2015, that's not an easy thing to say. So it's very impressive.
And Suncor actually, before even Steve. Suncor has been on record as supporting carbon price for 20 years. So the reason I just wanted to throw that in is that I find there's too often government and business, there's a sense of we have to tell business what to do, because if we don't, they're just going to be horrible, evil people. Right? Now, that happens. I get it. And there is absolutely a need for regulation. Listen, in my early lawyer days, I spent a lot of work doing competition law. Because you need it. You actually need those things to have a society that really works, so people don't go off, taking advantage. But there is also huge opportunity to say, what are your strengths? What do you want to accomplish? What do we want to accomplish? And how can we build on each other's strengths and weaknesses? Because there's actually a surprising amount of similar goals, a surprising number of similar goals, a surprising amount of similar desire to get to those goals. And we all too often assume that it's going to be some kind of antagonistic. So I do think when we talk a little bit, we have to talk about regulatory sticks, for sure. We also need to talk about regulatory carrots, because we also have to recognize that especially big public companies, we're beholden to how the capital markets work.
Right. Okay, before I go to the next section, I'm going to start with Paul in the next section on investment. But before I do that, Paul, do you want to say anything in response to what you've heard?
Yeah, sure. I guess the only thing I'd say is I think to do this transition, we're fundamentally talking about, I think it's going to be driven by policy at the end of the day. And I think the issue is how do you work together? How do businesses and government and civil society work together to forge those policies? I mean, we're talking about moving away from the cheapest source of energy, fossil fuels, to much more expensive sources. That's not an easy thing to do. It's not an easy thing to figure out internationally or even domestically. And so having spent, and I guess the other thing I'd say is having spent most of my career in government, the thing that government is least well equipped to do is to sort out these big supply side changes in our economy. So how do we actually change the nature of production? If you go back to the energy crisis of the 70s, the inflation episode, we've never really come to grips with aging. Those are really hard things for governments to sort out, largely because they are demand management instruments. They've been built out of a Keynesian tradition. And now we're facing the supply transition kind of, of our lifetimes. And so pretty well in every dimension, these policies are complicated. And I think complicated in ways that public servants don't fully understand, and probably the business sector doesn't fully understand. And if I'd say there's one thing we need to get better at in this country, it's creating the space to actually have solid conversations on how to achieve that. And you just have to look at the relationship between the federal and provincial governments in some provinces. You know, the former Indian Prime Minister Nehru has this great observation about the British, which was that they had this remarkable ability to align their material objectives, their moral objectives, their moral outlook with their material objectives, and too many times that happens in this country.
We're going to come back to the point about governments working together and the extent to which that's possible. I want to pick up on your statement about you know, fossil fuels being the cheapest energy source and other sources are much more expensive. I think this is something that it amazes me how many people I come across who think, well, once we've decided that fossil fuels are an important part of the problem, why don't we just switch away from fossil fuels? You know, failing to recognize that there's a reason why most of the world has built their economies and their energy systems on fossil fuels. It's just tremendously efficient energy source. It's transportable. It's cheap. It just has this really important downside that we've now got to take very, very seriously. So let's go to investment. Paul, why should we care so much investment? Why is investment in the title of this this event? Why are we focusing on this as an investment issue? So why the focus on investment, and also what are the key challenges regarding investment or investment policies?
Right. So if you look at our challenge, we've got 730 or so megatons of CO2 that we emit in this country. And roughly, if you break down the numbers, about 2/3 of that resides in the business sector. So oil and gas, agriculture, heavy industry, and then, you know, the business kind of usage of things like electricity generation and a few other things. And you can get different numbers. StatCan actually has an 80% number. I think that includes the government. But roughly speaking, 2/3 of our problem resides in the business sector. And most of that involves changing the capital stock. Like, how do we change the stuff that's currently installed so that it's more energy efficient, be it heating systems for buildings, building carbon capture and storage facilities for the oil and gas sector. I mean, you can go down through the list. It's a big combination of capital and then, in some cases, higher operating costs, not universally so. So that's why you should be focused on investment, one. And two, I think we actually understand consumer demand pretty well. I mean, we kind of know at what point and what's going to drive consumers to buy electric vehicles. It's going to be price. It's going to be a question of preferences. But we don't really understand how businesses do these big transitions. So I would say both just the scale of the problem is largely a business problem, and then the complexity is really in the business sector.
So when you think about investment, let's focus on private sector investment. What are the particular challenges? I mean, on the surface, you can say, well, okay, what we need to do is invest in lower carbon technologies and develop lower carbon technologies. What's the uncertainty in all of this that is applying the ointment?
Yeah. So we built a system in Canada, rightly so, to incent investment by providing a cost incentive, a carbon tax, so make investments to avoid the carbon tax, and a revenue pickup by the creation of carbon credits. I think there's two problems with it, or there's two challenges with it. Having said that, before I go on the challenges, let's just reiterate, I think the approach is right. It's just got some gaps, and the gaps are significant, and they need to be addressed. Because right now, I think we're in this kind of suboptimal equilibrium where businesses are kind of sitting on the fence until these uncertainties and these gaps are resolved. The first gap, which is the easiest one, is just a pure political one. You know, is there going to be a change in government that comes along in this country and just changes the entire regime? You just have to follow the political debate to kind of get a sense of how real or not that is. The more significant one actually is, I mean, it relates to the structure of the system we put in place for businesses, which is an intensity-based system. So we intentionally don't want to tax our businesses out of business in a world where other countries are not pursuing a carbon tax. So we have these intensity-based targets. So for the oil and gas sector, roughly speaking, what you need to do is reduce the intensity of the emission per barrel by 10% in the first year and then going down 1% for the next 10 years. So generously call it a 20% cut in emissions intensity. But we want to decarbonize the whole thing. We don't want to just decarbonize 20%. And so the problem that we have fundamentally is we have a system that, if you will, is dealing with a global situation where there is no harmonized, in fact, there's very little carbon taxation going on globally. We are taxing, but at a rate that is not sufficient to get us where we need to get to. And so how do you, and the way it manifests itself for a business when they look at this from an investment perspective is they look at this and they say, well, I can avoid the carbon tax and that gives me so much pickup, although not a lot, frankly, because most of these businesses are decarbonizing anyway. The big gain is, can we sell the credits from decarbonizing the other 80% of what's not being taxed? And the answer right now is probably not. Most businesses that I deal with are putting a zero next to that. And so it seems to me the big gap that needs to be solved is, how do you underwrite future credit markets? And to what extent should you underwrite future credit markets as a government? Otherwise, we're kind of stuck. And I'd say the good news is the last emissions reduction plan recognizes this, references the need for policy certainty as it relates to credits, talks about approaches such as contracting for differences. Right. And I guess the question is, how far can we go?
Okay, so Rachel, just to warn you, I'm going to come back to you after Martha, and I'm going to ask you to pick up on this point about the contracting differences and what it means to be selling credits and how we could actually expand the set of possibilities so that firms could have the incentive to do that, knowing that they could actually create those credits and then sell them. So that was an unscheduled thing, but I'm just warning you now. You got about a 3-minute warning to think about that.
The federal ITC.
So, but you want to jump in there. You want to jump in there. Jump in there. Go.
I want actually two higher level things. One, investment is investment. Look it up in the dictionary. It's not an investment if you don't get a return. So you have to understand, when we talk about investment, when we're talking about all the money that's going to be needed to invest in emissions reductions, we're not talking philanthropy. An awful lot of people don't understand that when you're in business, you actually need to continue to show a return. It is how markets work. Now, a government might see it as an investment in a different description, but that's a really important point. And then with carbon pricing, notwithstanding, support for this for a long time, we cannot continue to see Canada as an island. And so it's really important to say, look, if you're saying as a company, I'm willing to invest in this because my only alternative is to pay a carbon tax, so I'm incented to invest so I don't pay the tax, that's still a cost. And so for any Canadian companies that are actually competing globally for investors, our bottom line is worse. And so having to be able to manage through that is something that governments also understand. And to date, I think there's been some really robust conversations about what that means. But those are just really a couple of high level, you understand this stuff costs.
So can I just continue on that theme? And instead of asking the question that I was going to ask you, I'm going to ask you, I know I'm going to be unfair. And I'm going to ask you tell us about how Suncor has responded to the carbon price that it faces, because Suncor is interested in making a profit. Carbon pricing is adding costs to its bottom line, or one of the lines, and the expectation of future carbon prices. Like, how is that all thought about? How difficult is it for Suncor and presumably the rest of the oil patch to deal with this?
Okay, so one is really, really hard. But I will also say that the attitude toward carbon pricing has actually changed quite a bit, and Paul nailed it. At this point now, the attitude is not carbon pricing because we're going to invest and put this money over here so we can avoid paying the carbon price. The way we look at, because we're doing this stuff anyway, the global pressures, investor pressures, other pressures, and I will talk about the Oil Sands Pathways to Net Zero Alliance. We're already on that path down to get to net zero, so we don't need somebody to tell us with a carbon price. We're not doing it to avoid paying a carbon price now as much as we might have been thinking that a number of years ago. Now, the issue of carbon price is much more, what are the credits worth? it's a nuance, but it's actually, it means a slightly different discussion around the executive table when we're talking about decisions about capital investment for 20, 25, and 30-year projects, that's our business. I did mention, so it's going to be really tough, and I will say I'm the chief climate officer for an oil sands company. In certain circles, that just stops the conversation right there. But in my view, it actually should encourage the conversation. So at Suncor 2 years ago, we started down this path of recognizing it's not going to be a carbon price worth 20%. We have a goal. We need to get to net zero by 2050, certainly in terms of our production. As an oil company, we brought in the other oil sands companies. We ended up creating the oil sands Pathways to Net Zero Alliance. It's now 6 companies. We represent 95% of oil sands production. Just to be clear, we're a really big honking problem for Canada's emissions. Oil sands alone, oil and gas in Canada is about a quarter of Canada's emissions. Oil sands alone, a good 10%. So we recognize if we can actually do this, this will be the biggest single reduction in emissions in Canadian history. That's actually that's not bad. We're also not a software company. We're not a retail chain. We're oil sands. So yeah, it's going to be really hard. It's going to take significant investment, which I say in quotation marks because when I say carbon capture and storage, it's a cost. There's no revenue. We're used to pulling stuff out of the ground and selling it. There's no revenue associated with taking stuff and putting it back into the ground. It's more like waste disposal. Nobody pays you for it. So it's a net.
Avoiding the carbon price.
But that becomes ultimately such a small part, frankly.
We need a higher carbon price then. But at a higher carbon price, that becomes.
But then I go, Chris, back to if it's just because it's a higher carbon price, it's still a net major cost to an industry that is trying to be globally competitive for investment. So you're right, but I circle it back. So we determined that we couldn't do it alone. Suncor certainly couldn't do it alone. The oil sands companies as a group couldn't do it alone. And so we approached the federal government a year and a half ago. We didn't wait. This is long before the emissions reduction plan. We didn't wait. We went to government and we said, we're a big honking part of your problem. We therefore need to be a big part of your solution. We have to do this together. It took a lot of effort to build up any kind of credibility and trust. I can tell you when we first went to Ottawa, and you would know this, right? This is oil sands. Not a lot of, we're evil, right? It took a long time to build up the credibility and trust to be able to have the conversations that ultimately resulted in biggest single example, the investment tax credit that was announced in the budget a few weeks ago. Absolutely critical to being able to get major infrastructure like carbon capture and storage. Now, there's a whole lot more to pathways, hydrogen, fuel switching. Without question, CCUS is by far the biggest single infrastructure project part of this, and I'd love to talk to people more about it. But this is an example of industry saying we have to do this and not waiting, but an absolutely critical example of how collaboration is key.
Okay, so both of you have mentioned, Paul and Martha have both mentioned carbon credits, and I just want to come back to Rachel, and I want to make sure that everybody out there understands what is meant. So when Paul says something like, there's uncertainty, and what the firms really want is certainty about what they can do with their carbon credits. Maybe sell them, get money from somebody. Who is that somebody? And basically same point from you. Not so much avoiding the carbon price, but actually getting carbon credits. So Rachel, can I put you on the spot for that?
I'm going to first put in a bit of broader context, because I think the two key things we're talking about here.
You can deviate from my request any amount.
But the two key things that are needed to get investment flowing are certainty and incentives. And if we were in a world where all countries around the world had a clear carbon price that everyone believed would follow the trajectory they've announced for the next 30 years, there would be no problem. Investment would flow.
That would actually be amazing.
Yeah.
This world could figure that out.
So repeat that condition under which there would be, quote unquote, no problem?
So if all countries in the world had a trajectory going forward for 30 years of a clear carbon price on all emissions, and everyone believed that that trajectory would take place, there would be no problem.
Which means that all political parties would be committed to it as well.
Yes.
Yeah.
All
Okay.
countries.
Yeah, and yes.
So that is unrealistic. So we're in a world where there's a lot of uncertainty as to what the trajectory is going to be domestically and what it's going to be internationally. And the other thing is that markets can move in weird ways sometimes, and that we can see tipping points that suddenly happen and they will move a lot more quickly than we expect. So within that context, we're trying to build a system domestically that provides those incentives to get going without hurting the competitiveness of the companies that are operating today. And that is a challenge. So you want to provide incentives and certainty for those companies that are willing to put the investments in and willing to make the changes. And I'll add something, Martha, too, that, I mean, while carbon capture and storage may not have value, there are a lot of things that we're going to be doing in this transformation that have enormous value. And they're going to have enormous value globally. So if it's electric vehicle battery production, those are going to have a huge market. We're talking about the minerals that are going to be produced in Canada and sold to manufacture those batteries, huge value. Hydrogen potential, huge value. So not everything that the economy is going to be changing towards is going to have no sort of market value. There's enormous opportunity in this transition. So within that context as well. So credits are one part of the picture. And they may be important for certain sectors and certain provincial regulatory systems. But within the grand scheme of things, we really want that investment to be flowing towards the things that are going to generate value in the future, the things that are going to generate growth and jobs and help us achieve net zero goals all at the same time.
One of the ways that we are seeing that carbon capture and storage has value, as in addition to just avoiding a carbon price, is we're starting to see cement producers and asphalt producers that are buying that stored carbon and injecting it into their cement and into their asphalt as a way to build a carbon sink, but also as a way to improve the product. And so all we really need as a world, is a massive way around the world to use all of that stored carbon for, useful things, but that's hard. Final comments on this, quick, before we go back to Rachel to kick us off on sustainable finance and what that means.
Just very quickly on your credit question. So credits become important because they become a revenue source for a company like Suncor that wants to decarbonize all of its production, way more than it has to due to the carbon tax, because it can then it can basically sell to somebody else who wants to buy the credit to comply with the tax to meet their obligation. So to the extent that Suncor does more than it needs to under current legislation, it generates credits, and that's the way it's going to finance these projects.
Except that we live in Canada.
Yeah.
And provinces,
Can't trade
territories,
credits across
and
provinces.
10 provinces, 3 territories, and we don't get along all the time, and we certainly don't get along in terms of credits.
So there's the punchline, folks. We need our provinces and our federal government to get along better. Now, when have you heard that in this country? Hardly ever does that ever come up. Okay, sustainable finance. I'm coming back to Rachel to start this off. So what does this mean? What is sustainable finance all about? Is there some component of greenwashing in this? Is this just a nice image of the future? What is it all about?
So at a basic level, sustainable finance is about aligning financial flows, so flows of money, with sustainability goals. And sustainability is broader than just climate change, but I'll stick to the climate change component. And so when we're talking about bank loans, investments in stocks, insurance, it's all of those things that we need to align with our climate goals. And there are a few ways to look at it. So the first way is sort of a materiality perspective or a financial risk perspective. So, you know, if a company or a financial institution is investing in an asset that faces a risk, so if the carbon price goes up or if a regulation comes in, that asset may no longer be profitable or they'll have lower return on their investment. That's a risk, a financial risk. And then similarly on the changing climate side, if there's an asset that's vulnerable to floods or wildfires, that's a climate-related financial risk. So looking at it purely from a financial perspective, there's a lot that needs to be done to sort of align those transactions with a climate transition. But there's another perspective of looking at sustainable finance, and that's you know, what's the role of financial institutions, financial products in helping to achieve domestic net zero and also global climate goals. And so that's a bit of a different perspective, and that's more of, you know, financial institutions aligning their investment portfolios, their lending portfolios with the net zero transition. It means reducing the emissions intensity of what they're investing in, and it means investing more in things we need to increase, such as renewable energy, clean technologies, electric vehicles, and less in things that we need to decrease, such as fossil fuel production over time. But then there's a third category of sustainable finance, and this is where the greenwashing comes in, and that's in this misleading category. So things that are labeled sustainable or some variation of sustainable that are not really aligned with what we're talking about with net zero transition or global climate goals. And an example of that is what's called ESG, so environment, social, governance. And what this is generally a rating system of companies that incorporates a variety of metrics, and they vary depending on who does the ratings, that incorporate a range of environmental criteria, social criteria, and governance criteria. And basically, you don't know what you're getting. It's very unclear as to whether these financial products that are labeled ESG are actually supporting you know, a net zero transition, for example, because of all the different metrics that are in them and the different approaches. And now we have new types of labels that are coming out, sustainability-linked bonds, transition bonds, other types of things, and it's not regulated. There's no consistent and clear definition of what these products are and what needs to be in them or not in them. And so as an investor, a company or an individual investor that wants to make sure that their money is going towards something consistent with our climate goals, it's difficult because you don't know what you're investing in. And so one of the things that's needed to get financial flows going in the right direction is greater control over the labeling of these products and more consistency.
Okay, so I think you did not say that ESG is greenwashing. I think what you said is there is a bunch of greenwashing that can and does take place in the ESG world because of lack of standardization. Standardization in terms of the metrics,
yeah,
in terms of the communication, in terms of the measurements. Is that?
Greenwashing implies some sort of intentionality behind it, some sort of, you know, purposely misleading. And I think it's less necessarily that, I would hope, and it's more of just something that's been built up into this mishmash, that no one really knows what it is anymore because it has so many different things hanging off of it that you think you're investing in something sustainable or something positive socially. And then when you look at what's in that investment, it's right. Not.
So it sounds like the argument for standardization there, if I can use that word, is much like the argument for generalized accounting rules in an accounting world, right? So my guess is most people are going to be okay with standardization of that type. But let me then follow on. Paul, this is for you. So 3 or 4 months ago, I was at a meeting. Senior banker stood up and said, more or less direct quote, "Don't worry, the money will always flow to the profitable projects." I wasn't very surprised by that. But if it is true, then what is the role of public policy? If it is true that money is always going to flow to the profitable projects, then where does policy fit in?
Yeah, well, kind of if you follow the logic of oil and gas being the cheapest source of energy, without public policy, we're going to keep using oil and gas. So, I mean, the role of public policy is fundamentally to price the externality, as we economists like to say, on the emissions.
I love hearing you speak that way. I really do.
But it gets really complicated really fast, right? I mean, Rachel made the point earlier that if the entire world had adopted a carbon tax, we wouldn't be having this conversation, because the externality would be priced, and we'd all agree with what the price is. The problem is we've got Canada following, what you might say is a reasonably sensible policy set, but without the rest of the world following it. So what in the world do we do? And, so it's got to be a mix of stuff, and it's going to be messy, but the mix of stuff has to include some kind of global coordination that's more than just this powwow once a year where we all agree to do stuff that we're not accountable for. There needs to be some kind of economic instrument. I mean, I and Paul Booth spent some of the best years of our lives traveling the G7 and G20 circuit, and that's so what you have there basically is a set of institutions that grew up around exchange rates, and that was basically from the Great Depression until now. We've had like a huge intellectual heritage. We've got very large and generally successful international institutions, the IMF, the World Bank, World Trade Organization, and for the most part, countries that have bought into this. But we don't have anywhere close to that in the climate side, and climate's way more complicated than exchange rates. And so at one point, as we kind of sort through this stuff, we have to come back to this international issue. I mean, India and China were telling us something when they said, no, it's not 2050, it's 2070 at the earliest. And they were saying, we're not willing to impose that on our population. So something's going to have to happen, There's going to have to be a Plaza Accord related to climate at some point.
And you're up next for a comment on this.
So money won't flow.
Money won't?
Well, money won't flow. I mean, it'll flow to some stuff, right? We shouldn't be kind of too dramatic about this. But if you take groceries, to the numbers we've seen is to shift from heating with gas to electricity for your average grocery store is about $200,000 a year. Big store. Nobody's going to do it unless they're forced to.
Incentivized to, you mean? Incentivized.
Or forced to. I mean, the solution might be, no, you're all changing over a 5-year period, and then you've got a level playing field, but, we're all going to pay more for our groceries. Or you incentivize them, in which case you're going to finance it through the tax system. It all kind of comes back to the same thing as far as I'm concerned. But you're not going to get these changes unless you've got some pretty seriously dedicated policies to drive them. And they're complicated. They're complicated in and of themselves. They're complicated because of our federation, and they're even more complicated because of the international situation.
I'm so glad we have public policy schools in this country that can take on some of these challenges. You're up next on anything you've just heard on sustainable finance. There you
go. So a couple of things. I think, by the way, I totally agree. What would we be doing without public policy schools? Well, I think we have a couple of colleagues, and a couple of foundations, Canada West Foundation, and foundations like Max Bell Foundation that help support all of the above, which is wonderful. Thank you, Ellen, again. A couple of comments. It's not just that money will go to where the profits are. Money will leave the places where there are no more profits. And that goes to the challenge that I talked about earlier. If you're as a sector, you're being asked to spend a whole bunch of money that doesn't actually have a revenue, that's a net cost to your bottom line. And your investors are going to go somewhere else. So we do have to be aware of that as Canada, that we cannot be an island. That said, as a Canadian, it's not enough for me to say, well, India and China, I'm not taking you to task on this. It's just, it's not enough to just say, well, no one else is going to do it, so why should Canada do it? I actually do think it's incumbent on us to lead. It is incumbent on us to do what we can. I just think we have to be really realistic about not jeopardizing people, not jeopardizing some of the other things that are so important. One comment on ESG. So ESG is much more than green, right? It is environment, but it's also social, it's also governance. And the Globe and Mail came out with a story a week or so ago that highlighted that the majority of the world's big ESG funds were actually much more heavily invested in Russia than in Canada. So ask yourself, exactly to your point, Rachel, ask yourself, okay, what are the parameters? Like, what are the metrics here? And I would say then, yes, we need standards, we need metrics. Right now, frankly, in our industry, we've been doing disclosure for well over a decade. Pick your body, TCFD, SASB, GRI, now the big accounting firms, working with the World Economic Forum, also working on what's the set of standards that we should have. Securities Commission, specifically in the United States, is now looking at it way more complicated than exchange rates. So, but I want to just say, like Montreal, be proud. We actually several companies, I know Suncor was involved as part of the consortium working with the CPA to encourage the establishment of the International Sustainability Standards Board. We tried to get it in Canada. We got half of it in Canada. The other half is in Frankfurt. But that's a really big deal, and we're really keen to be supportive because, frankly, it's not a lack of standards right now that's the problem. It's just there's a million of them, and it becomes untenable, and it's really hard to keep up with that. That's it. I had lots more, but that's.
Thank you. Okay, I'm going to try to open up to the floor in about 10 minutes, slightly less. So I was going to ask a question about whether we're in a new world with government policy, but I think we kind of have now. Everybody has said that it made it pretty clear that we're doing things that governments haven't done before. The private sector is doing things that they haven't done before. This is a new world, and it is going to be tough. But I want to then go to the last question, which is back to this point about governments working together. So I'm going to ask each of you for a couple of minutes on your thoughts about what are the big challenges. So, why is this a multi-government issue? Which governments do you want to focus on? Federal, provincial, territorial, municipal, something else? And are you confident that our governments are up to the challenge? Who wants to start? Is that a yes? Oh, it looks like it's Martha. Martha.
Well, okay, can I just say, she tried to sneak in, but we do have somebody who knows more about this issue than most people. Christy Clark, former Premier of British Columbia. You tried to sneak in, but you knew you were going to get
I think she's probably going to ask a question during the Q&A.
I think she might.
So everybody get ready for that. Everybody should get their questions ready, by the way. It's coming at you in 8 minutes.
Sorry, but not really. Is there a theme here? It has to be in all of the above. Look, we're oil sands. You can't pick it up and move to a different jurisdiction. Albertans own the resource, right? So we pay royalties totally in addition to taxes and everything else. We pay the people of Alberta the right to actually extract and sell that resource. That's really important. So Alberta has to be at the table, carbon capture and storage. Alberta and Saskatchewan among the best pore space, among the best geology for carbon capture and storage, along with under the seabed in the North Sea, among the best geology in the world. Not a surprise. You could take stuff out and you can put it back in. But that requires collaboration because you have a federal government that wants to impose some of these policy sticks. You have a federal government that wants to have whether they're avoiding disincentives or creating incentives. You have municipal government. So if we're looking at significant changes in the Fort McMurray area, we're going to have move a fair number of people. Perhaps I'm not saying that we will or not, but we have to be thinking. We have, as a company, have to be thinking about this. What happens when you actually build a carbon capture and storage, and you do less the extraction? What happens to those people? Those are municipal challenges. Those are questions that municipalities absolutely have to be involved. Actually, a better example is in municipalities in various parts of the country that were very heavily dependent on coal mining, right? Obviously, major transitions, and you can't just ignore people. You can't just say, "Here, too bad, so sad." Not in Canada. You can't. Other parts of the world, you can. So there's no question there has to be collaboration. unfortunately, it's a little bit like government feeling like you have to be somehow telling business what to do. And it's always like, oh, well, they're not going to do it if we don't tell them what to do. It's like the federal government feeling, some worse than others, feeling as though, well, the provinces won't do it unless we tell them what they have to do. Obviously, in this province, that goes over really badly. But I can tell you in Alberta, it doesn't go over very well either. And so, you know, the opportunities, we have great people doing amazing things all across the country, and yet we have this incredible inability to get around a table and stop the, we're telling you what to do, or we don't like your politics and we want to one-up you. Why don't we do more of, okay, what are the best practices? We've had CCUS in Alberta and Saskatchewan for quite a long time. Why do we not have the federal government coming to talk to people in Alberta and Saskatchewan and say, so, what did you learn? Right. It really cost a lot of money down there. What did you learn to make this better? But we haven't been able to have those discussions. We have huge learning that we can do in this country. We have huge learning that we can do in terms of electricity transmission. Whole other challenge in terms of climate to be able to figure that out in this country. But we have to get away from this assumption that it's going to be in battle. It doesn't have to be. Right. We can actually ask, what did you learn? What are you doing?
Asking questions rather than dictating what we should do.
Yeah.
Paul, same question for you. What's your favorite intergovernmental challenge you want to talk about on this issue? And then Rachel, or your least favorite, and then Rachel gets the final word.
I have no idea what my favorite intergovernmental challenge is. I would just say there's...
Have you encountered any intergovernmental challenges when you were Deputy Minister of Finance? None? Oh, none. It was just smooth sailing.
Yeah. Look, I just think there's almost different worldviews out there, right? Where you've got, on the one hand, you know, parts of the public sector that view this uniquely as a GHG emissions reduction problem without actually thinking about the corporate side of the equation. And the business sector will look at it and say it's all about the cost of capital. And if I'm doing stuff with a cost of capital that's higher than I can finance, then it's negative, like it's reducing value. And so and you run into these types of kind of dichotomies in many dimensions in this area. And so I just think we need to find a better way to communicate and talk things through. And it permeates pretty well all levels. Like the electricity standard that the federal government issued just a couple of weeks ago, actually it was about a month ago, they only allowed a month for consultation. And it didn't need to be the way it was. It was, you know, you could read into that whatever you liked, but it just was not a good way to have a discussion. And I think has gone sideways in a way that probably isn't helpful to the federal government also. So yeah, I don't have an answer as to, well, I shouldn't say that. I think we've got lots of examples in the past where governments of different stripes have figured out how to get along when it was in their interest, and we need to get to that point. You know, Harper-McGinty harmonized the HST in Ontario. Those two governments didn't really like each other, but they both said, no, we got to, like, it's in our mutual interest, let's figure it out. And we got to get to that spot.
Rachel.
So I think one of the biggest challenges in governments is that the climate change challenge has pretty much exclusively been given to environment departments up until relatively recently. And it hasn't been recognized as an economic challenge, as a societal challenge, and something that really requires all departments to be thinking about this issue. I mean, we need a labor force transition. It's going to be interacting in fiscal concerns in terms of the aging population. At the same time, we might be losing revenues from oil and gas production. You know, when we're talking about Indigenous reconciliation, at the same time we want to massively increase clean energy and mining. There are a lot of intersections across all of the challenges that governments are dealing with, and it's going to require a level of horizontal policy development that they haven't been super successful at to date. The response to the pandemic might have been one of the best examples of actually pulling together and getting some of that horizontal policy development going. But you know, we need that same kind of thinking on the net zero challenge.
There's a lot of discussion these days, right, about whole of government approaches. That's horizontal, but it's just, it looks great on paper, but it is very difficult, right?
Well, having worked in government, it's really tough to do horizontal things when you have a specific mandate, you have a specific role. It's very difficult to do things across departments.
Well, the silos of departments exist for a reason, kind of like silos in university departments. They exist. There's a reason why specialization takes place. It's incredibly efficient.
We shouldn't be too despondent, though, because we have managed in this country to build things like a common tax collection agreement, common pension plan. I mean, we've got templates and approaches that we've used in the past where we've, in a pretty complicated federation, we've managed to sort things out. So, but I agree entirely with Rachel that too much of the environmental agenda has been left solely with environment departments. And that
Spoken
needs
by
to be
a Deputy Minister
broadened.
of Finance.
Yep.
Would Environment Canada be okay if a big chunk of climate policy got shifted over to, I don't know, finance?
I mean...
Or NRCan?
The Department of Finance legislated the fuel charge. Environment legislated the output-based pricing system. Finance introduced the ITC. I mean, we're moving in that direction because these issues are becoming more and more economic issues. And I think it's just a natural progression, right? I mean, it's going to be messy. That's the way that's the nature of these things.
Let's end it there, and let's thank you very much, all three of you. This is terrific. And we have lots of time for questions from the audience. I understand there are also questions coming from our, so there's a microphone here, so please jump up and ask a question, but are there also questions coming from the online audience? So I'm not sure how we're going to do that. How are we doing that? Oh, okay, all right. So Alan is not asking questions on his own, he's asking questions on others' behalf, is that correct? Correct. All right, so who's first up?
There must be somebody in the room who has a question.
Somebody in the room for a question.
I have a question.
Is there anybody who has any thoughts on running a government in this country that would like to comment? Oh yes, you in the front row. Okay, question. Yes, please. Do we need Christy to be at the microphone in order for the audience to get it? Okay, thank you.
My question is this. I'd like to ask each of you to reflect on, I mean, I'm a big supporter of carbon taxes, as you know, but it does seem to me that the fundamental flaw with carbon tax in this country now is that the money that comes from a carbon tax goes into growing government and making it bigger, rather than going back into the economy, incenting the private sector and individuals to change their behavior. So I wonder, I mean, that's my view on it. So I wonder if you guys could kind of comment on where we're at with carbon taxing, kind of in the discussion about returning the money back to the economy, because Canada cannot remain competitive at the level of taxation that we have currently. And if provinces across the country are adding carbon taxes without making that revenue neutral, Canada's going to fail economically. So how do we find a way to make carbon taxes work? And you've talked about some of the complexity around that, but at the same time, ensure that carbon taxation isn't putting our economy on the back foot, instead is actually helping us grow the economy and shrink government.
Okay, who wants to take on? How are the revenues? You get to pick your policy. You can talk about Quebec's cap and trade or the federal policy or the BC carbon tax, but how are the revenues being spent?
I'll start by saying that the point of a carbon tax is to not pay it. So hopefully, as quickly as possible, we get to the point where businesses are not paying much, if any, carbon tax because they've reduced their emissions. So hopefully with some government support and other things, they can get to that point. But my understanding of the current system is that there are rebates for individuals, so that we're not increasing the burden on low-income individuals, for example. And this is with the federal system. So certain provinces have their own system, such as BC, but with the federal system applies, there are rebates to individuals, and some of the money goes back to farmers or small businesses, et cetera. So the idea is not to enhance other government programs with it, but really to make sure that the carbon price is not increasing affordability issues or creating competitiveness challenges for business. And that's why the output-based pricing system exists as well, so that businesses who are operating in a global market are not unfairly disadvantaged relative to their competitors.
So is it still true in those jurisdictions that have the federal carbon tax in place? Is it still true, because it was when it was introduced, that roughly 90% of the revenues were going back to equal per capita rebates within each province? Is that still right at 90%?
I believe so, yeah.
Yes,
What
on the
you're
personal side.
describing
That's right.
is-
On the personal
is
side.
Is the federal fuel charge. On the business side.
Sorry, and it's worth pointing out that those rebates are going back, if they're going back equal per capita basis, then they're going back.
It's redistributive.
They're converting what would have been a regressive carbon tax into a progressive carbon tax and rebate combination. So low-income people are actually getting more rebate back than they spend on the carbon tax. High-income people are paying more in the carbon tax than they're getting on a rebate, because the rebates are all equal across the board. But 90% of that, so it's not revenue neutral, but it's 90% toward revenue neutrality.
But business still becomes less competitive. Certainly.
Well, so the output-based pricing system is about making sure that the carbon price doesn't undermine the competitiveness of cement producers or steel producers or fertilizer producers.
I think that's our fundamental problem,
Which doesn't take place in BC, by the way. The output-based pricing system doesn't take place in BC because when BC introduced its system, it basically ignored the large industrial emitters, and it focused, because it was a much smaller problem in its economy than it is in Saskatchewan and Alberta. So BC introduced what is basically mostly a retail carbon price, and when it was introduced, as you know, it was guaranteed to be revenue neutrality, and then that changed with the subsequent government.
That's correct.
Yeah.
Part of that's correct.
Yeah, I think our big problem is we're stuck with these two kind of competing situations where on the one hand we don't want to tax our heavy emitters to the point we need to tax them to actually get them to reduce their emissions 100%, because they're going to go out of business and we're just going to have carbon leakage to the rest of the world.
Which comes back to the worldwide carbon price. If we had the worldwide carbon price, then we wouldn't have that problem.
We're kind of stuck in this bad equilibrium where we've got what you might think is an otherwise rational system, but without global cooperation it's going to be hard to achieve what we kind of want to achieve. And we got to fill those gaps somehow. And frankly, I think part of what we need to do is get some stuff going like CCS so that we can start working on it and driving those costs down so that we don't need a $150 carbon tax. We need something like 60. And then you're in a world where maybe we can work. But until we start, it's same like the oil sands, right? The oil sands started off as one of the highest cost producers in the world. They're pretty well the lowest now. And we need to do the same thing on things like CCS and hydrogen. Otherwise, I don't see this problem getting solved anytime soon.
Can I just one huge kudos to Chris, because the work that EcoFiscal did actually added to those incredibly important discussions in this country. So just a shout out. So thank you. But I also, just one point about the carbon pricing, there's one about what you do about the revenue, but the sheer existence of the tax is supposed to change behavior, right? It isn't what you do with the money you get back. It is, you put a tax, it's just like, sin taxes. Technically, you put a lot of tax on cigarettes, on booze, and booze, people smoke and drink less. I'm not sure if that's ultimately the case, but that was the intention, or one of the intentions with carbon pricing, was that it actually would, even at the retail level, it would change people's behavior. It's like water is hugely expensive in Europe. People, surprise, surprise, huge industry in incredibly water efficient appliances. It actually works. The price mechanism works, and that was the original intention. So it wasn't just what you do with the money, but I think politically there's also real value in being able to show what you do with that revenue, that you don't just put it into general revenue. I do think that's really important. We haven't done a very good job of that so
Now,
far.
Paul Booth has used a tried and tested approach among economists at conferences. He put up 2 hands.
I know.
Which meant he wasn't cheering. He put up 2 hands, and that means
I
there's
really
something
wanna
that has
know.
just been said that it's such an important thing that he jump in on. And then I've got Paisley with a one-handed, which means a new question. So Paul Booth, your two-handed intervention, 2-armed intervention.
Just briefly, I agree wholeheartedly with my G7 colleague on the need for international cooperation. But anybody who has had the misfortune of attending a global climate change conference, which some people in this room have had that misfortune, they know that, you know, getting the 195 countries or however many attend a COP to agree on anything is really impossible. And it certainly levels down and breaks up. But when it comes to actually making a difference, if you could get 10 countries to agree, that would be all it took.
Not a randomly selected 10, but 10,
the 10
intentionally
biggest
chosen.
emitters, right? And now that's not emissions per capita, because, you know, China and India have very low emissions per capita compared to us.
Yeah.
But frankly, Canada's not even in the 10 anymore. So, I mean, we could join in and be helpful, but if we could get cooperation or collaboration of 10 countries, we would have enough international cooperation. So it's just when people talk about, you know, international collaboration, if you think of it in terms of the United Nations, it really is impossible and you sink into despair. But when you think of the practicality of this, that only 10 countries collaborating is what you need, then maybe it's a scale that we could actually do something about.
Thank you.
Can I
Paisley, you are next up. Do you have a... Oh, sorry.
Can I respond to Paul?
Oh, absolutely. Sorry. Yes, please do.
I just wanted to note that, you know, not everyone realizes some of the things that have happened in the last few months because, you know, after the last conference of the parties on climate change, we're in a position now where countries representing 90% of global GDP have committed to reach net zero by mid-century. And those countries represent 80% of global oil demand, over 70% of global natural gas demand. And so Canada's no longer in this situation where we should be really worried about moving too far ahead of where the world's going. We actually should be more worried about not moving fast enough and that the world gets ahead of us and markets move before we're ready.
But there's a big difference between a commitment and actually taking the action. And Canada has been hurt by that because we've made commitments and commitments and commitments, and we haven't taken action.
Yeah, definitely. But with 90% of global GDP, even if you get half of that, there's still going to be some big changes happening.
Okay, so Paisley is next up at the microphone. I've got Phaedra on deck, but do you have a question from the audience, from the electronic audience? Not yet? Okay, so Paisley's up.
Thanks, Chris. Naturally, I wrote it down. So my question is about taking it back to investment, which you said earlier that investment requires certainty and incentives. And specifically, if you look at what the IEA has done, what the Climate Institute has done, or what my organization, I work for the Transition Accelerator, what we've done, we're building off of a mountain of research that suggests that there's, you know, a great deal of certainty about a net zero paradigm might look like, which is definitely increased electrification, a real change to how we heat our buildings, the expansion of a hydrogen network, hardening of infrastructure, et cetera. But with that kind of certainty, I wonder, how do we reframe the specific investment conversation or create the incentives, the policy tools, to shift away from talking about this perpetual frame of there's too much uncertainty, therefore we can't actually accelerate investment, and appreciate that maybe there is a lot of certainty about the big pieces. How do we just get going?
Great question. Some things we actually know or we think we know. How do we get there?
Yeah, I mean, I think a series of government guarantees that were contractual in nature on things like political, the trajectory for the statutory carbon tax, and then something related to pickup in carbon credits, be they from the clean fuel standard or from the system of carbon regimes that we have, would go a long way towards bringing forward a fair bit of investment. I think in some ways what you need to sort out is how do you circumscribe that in a way that is reasonable. And, you know, I've been kind of thinking it should be related to big energy infrastructure. And you need to define that, you need to have some paradigms. So I'd be, on the one hand, I think we need to move in this direction. On the other hand, I think we need to be careful not to move too fast in that direction so that you have this essentially massive system that turns out to be highly subsidized and on the backs of government. I think we just need to move forward with a series of contractual guarantees that basically underwrite the policy settings. And the question is, how do you put the right framework and parameters around that to move forward in a reasonable way? And it's kind of tough for governments, right? Because you're going to have, like, who gets this guarantee and who doesn't. The only alternative is to, and by the way, I thought the ITC investment tax credit for oil sands was a big, bold move on the part of the federal government. So I'd say well done. And to a degree, you could think of the ITC as being a risk mitigant, because what the federal government is saying is, I'll give you the money up front. You're going to lose all the CCA deductions that you're going to get in future, that you would otherwise get in future years, but I'll give you certainty of cash flows that relates to the investment. And then what we need to do is kind of use that same approach and apply it to carbon credits. And the question is, how do you do that?
So when we're talking about investment, though, for the electricity grid, we're talking about expanding the grid, east-west interties, et cetera, which I think is where Paisley is coming from. Isn't this also a hugely, depressingly complex political issue?
Oh, yeah.
You know, for example, Quebec Hydro selling power into Ontario. Right. And displacing Ontario power, specific
but I
types
think there's
of Ontario
kind of two
power.
types of investments you need to think about. I think there's investments that are essentially in the public or quasi-public sector. Not all provinces. Alberta has a private electricity market, but for most provinces, electricity is a public investment. And I think you need to distinguish between the two, because I wouldn't be worried about this kind of carbon credit underwriting thing for governments. Like they can sort that out themselves. I would be worried about the entire business sector and how do they make their decisions.
Okay.
And yeah, it is complicated, but I think with the right leadership, you can get this stuff done.
Rachel, you folks at the Climate Institute just came out with a report about electricity, and you had some comments about governments getting along.
Well,
you probably didn't use the words getting along, I'm thinking.
Well, I'm no longer with the Climate Institute.
I know,
But
I know.
One of the things that I wanted to talk about actually was the different types of investment supports, because I think there's also a way to divide it on where the technology is and where the market is. So if we think about this, S-curve of technology development, technologies that are sort of at that beginning stage where there's a lot of technological uncertainty, market uncertainty, they need different instruments of support, probably more support. But then when they're at that stage of, the costs are not that different from the alternative, there's a huge market out there, they maybe need less support and maybe some more of the instruments that Paul was talking about. But when we look at other countries, like the US Loan Programs Office they have in their Department of Energy, for example, is doing phenomenal work where they're actually going out and explaining to potential project proponents what they could do, and then financing the project. I mean, it's really mobilizing a lot of investment of things people didn't even propose, which is an interesting concept that Canada has not moved towards yet.
You want to add something quickly? We are we're going to have one more question.
Right.
So we got to be
I
super
think the power of the market, the power of customers, is hugely underestimated. If I take small modular nuclear as an example, we've been going around and around in this country, talking about lots of different technologies, just some really amazing stuff done. We in the oil sands have decided that this will only happen if we actually, this is part of the pathways to to actually be working together to say, actually, if this is going to get off the ground, it'll be because we actually will be by far the biggest single potential customer. So the power of what you can buy is incredibly important. You can't commercialize a technology until there are customers actually willing to buy it. And so our view is that we bring an awful lot of potential to the table as a potential customer, as opposed to developing technology and having governments provide loans as good as they are. It's not going to work if you don't have a customer. It's just not ultimately sustainable. And so our view is an awesome position to be in. Let's actually talk about what we can do and what we can contribute to this as a potential customer. And let's have those conversations. And that is actually, I think, really powerful, pardoning the pun.
Okay, we are going to be down to our last two questions. The questions are going to have to be quick and the answers are going to have to be quick. One question is from Phaedra, and the next one, the final question, is going to be from our host, Alan.
Thank you. Well,
Phaedra.
thank you, everybody, for being here, first of all. My question, just going back to the international conversation, I do think that's a valuable conversation to be having. I do think there has been a shift taking place where, previously a lot of the conversation happening was, about what can countries do at the national level, but increasingly we're looking at efforts at the international level. And so my question is about, the panel's thoughts, and please, anybody can answer, about, the recent news that former Minister of Climate Change and the Environment, Catherine McKenna, is now the chair of this panel at the UN. And I know we're cynics of the UN, and I worked at the UN Environment Program, so I'll be the first to say it's, has its pros and its cons. But my question is just, about the effectiveness of such a panel where, the people on the panel aren't there representing national governments or national interests. Like, it's very much a body set up to be like a naming and shaming sort of thing, and where they're setting standards and setting norms at the international level. So I'm curious about that.
Yeah, I mean, I'm not aware of the details of specifically what they're going to be doing. I saw the announcement and that they're going to be looking at potential greenwashing at the company level and even, I think, at the government and community level. Which is interesting, and you really could help illustrate some of the challenges around the commitments that we're seeing at a corporate level, that claim to be consistent with climate change goals, that claim to be sustainable, but maybe the reality is something different. And there are a few organizations now that are kind of following those corporate commitments and calling out those that they think are maybe not being fully transparent about the true nature of what they're doing. But certainly a UN body like that could help shine a light on some of the issues and potentially lead to some of that standardization that we're talking about. Although maybe that International Sustainability Standards Board that Martha was talking about, that's partially based in Montreal, may have a better chance of coming up with some of those international standards that will apply corporately.
Do you want to add anything?
And just quickly on that,
Yep.
they've issued the standard. The standard is out. Like, the ISSB has issued the standard for comment by the end of July.
That's for disclosure, not for like financial products. So like the labeling of, yeah. But they could go there. Yeah.
Okay, final question.
Thank you, Chris.
Bring us home.
So I'm going to put two questions together that came in online because I think they're essentially asking the same thing. And the question is about thinking about the suite of policy change the many policy changes that you've all discussed today. Where in that suite or how, I guess the question is about the granularity of investment. We've talked about CCUS, and we have two specific questions about other technologies, nuclear, which you mentioned, Martha, and direct air capture. So I think the question is about, what's that relationship between identifying winners, betting on winners from a policy perspective, or not?
Wow, we could have a whole event on that one.
We could. And I think there was a certain paper a little while ago that talked about the, what's the terminology? The safe bets and wild cards. I go back to my comment, Alan, about the importance of commerce and the importance of being a customer. So I got to tell you, like Suncor is Canada's biggest producer of hydrogen, and we are Canada's biggest single consumer of hydrogen. We know hydrogen. And we just announced a major net zero hydrogen proposal with ATCO in the Edmonton region. We can do that because we are a big customer of hydrogen. So we know the economics of actually what we could do with producing hydrogen in a different way. There is a lot of hype out there about hydrogen. There's an awful lot of stuff. It's a little bit in response to Paisley's question. There are an awful lot of people out there who talk and talk and talk. And frankly, you really need to go down to the brass tacks of who is going to buy a technology and for what purpose. But there's huge power in that. And so is there potential for small modular reactors? Yes. Is there potential for hydrogen? And maybe not what the hype is, but there is some really cool stuff. But it's actually having the discussions with the people that are going to use it and the people who are going to buy these things. It actually, what we're learning is we're really coming down to maybe a half a dozen really interesting technologies. Do we know what might come 10 years from now? No, but we'll be certainly watching for it. But right now, we're really excited about a few that we can get our heads around and our pocketbooks around from a financial and commercial perspective. That's where we'll find the success. We won't find it by doing this.
Okay, Rachel and Paul on this issue, and then I'm going to ask you each for a 15-second snappy summary. 15 seconds.
Well, in terms of picking winners, there's a few things that we can consider. One is there a resource advantage, some sort of comparative advantage that a particular region of Canada or Canada overall has where we think we can be competitive. But we should also be looking at the innovative companies that Canada has, too many of which end up moving to the US or being bought out internationally and not growing and developing in Canada. And where some of those companies are operating. And they could be in things that we don't think about as part of this net zero transition. I mean, something like Li-Cycle, for example, out of Ontario, which is a business focused on recycling electric vehicle batteries. So that is not something you would consider necessary to achieve net zero, but it's a huge market opportunity. And they're being quite successful. They raised, their first IPO was like $1.5 billion. So there are companies out there that can drive growth and job creation through transition, and we just need to find them and support their growth.
Yeah, so very quickly, I think there's two types of winners that we're talking about. One is what Rachel just said, which is kind of technology development, and the next one would be actually firms that are wanting to apply solutions in a very large commercial way. And I think the art for government is actually to figure out ways to set up financing incentives where they're not really picking the winners, but they're providing kind of the objectives behind the investments that need to be made, and then make those investments in as commercially oriented and rigorous a way possible. We have the CPPIB as an example of how you can do that. There's something called the Canada Business Growth Fund that is worth looking at, because I do think one of the issues we have in this country is we've got a very prudentially regulated and prudentially oriented financial sector, and so there's probably some need for a more risk-based financial instrument, particularly on the technology development side. But then the trick is, how do you do that in a way where you don't have like a political arm picking the winners, but you do it in a more commercially oriented way.
Okay, folks, we need to end this, and I'm sorry, but we need to end this. So, just in case people don't know exactly where you are on the overall issue, I'm going to give you 15 seconds to give us your bumper sticker on the issue, on the evening. Your 15-second punchy summary of what you want people to remember about you, Paul. 15 seconds.
There is hope.
Excellent. This is good. That's a good bumper sticker.
And I'm a boothoid on the international thing. I think Paul's right. If you can get 10 countries to forge a way forward, we can figure it out.
So there is hope, and then there's an asterisk with many words. Rachel.
Focus on certainty, focus on incentives, and building the economy of the future, not just decarbonizing the economy of today.
So that's either a big bumper sticker or small font, one of the two, but a good message. You're it. You're the final speaker.
We have done this before. We have fought wars. We fought a pandemic. We actually can do things extraordinarily. We can do extraordinary things when we do it together. So my big thing is collaboration, collaboration, collaboration.
Okie dokie, folks. Thank you very much, Paul, Rachel, Martha. Terrific. Thank you all for joining us. I'm going to turn it back over to Alan to close, but thank you all very much for being here.
Thank you, Chris. Well, I only have two things to say. One is please join me in thanking all of our panelists and Chris Reagan. And two is we hope you'll stay around for some conversation, and food and drink. This is the most important thing. Food and drink is down the hall to the right. Thank you.